Anyone who thinks that 25, 26, $30 a pound is going to be here for another, 10, 20 years, it is not sustainable. So it has to come back. The industry will not survive if it doesn't. Cameco will not survive. We will not survive. None of the Western producers will survive. It has to come back. So people say it's not going to come back. That's baloney. As long as the demand for nuclear power plants and consumption continues to go up, current spot price at $25 or $26 per pound is unsustainable in any outcome.
Hello and welcome to Crux Investor. We spoke earlier today to Mark Chalmers. He is the CEO of Energy Fuels, the US uranium producer. We talked to him about some of the conversations coming out of DC, and also we get into some gruesome detail about the mill and what makes them different, plus some of the revenue coming in from the cleanup operation, plus a bunch more topics as well. Look in the description below to take a look at some of those conversations. If you want to look at anything specifically, click on that timestamp and that will take you to that part of the video. And if I could ask that you subscribe to our YouTube channel by clicking on the button in the corner. Plus, if you want to see more videos like this, of course, click the notification bell. Anyway, let's hear what Mark had to say. Hiya, Mark. How are you?
Very good, Matt. How are you?
Ready for the Christmas break, I'll tell you that.
Yeah. Well, I told you I put my Christmas tie on just for you.
Very
and
good.
Your viewers.
What have you got there? You got these
little Christmas penguins.
Little Christmas penguins, lovely. Thanks for taking the call. We just wanted to catch up. We haven't spoken in a while. Obviously, it's all quiet on the Western Front at the moment with regards to DC. Anything you've heard? Any news?
Well, look, it has been quiet. And we still always say we'd rather have a slow yes and a fast no. There is noise, coming out of D.C. The recent confirmation of Secretary Briette during his confirmation hearings, he did what was asked about the nuclear fuel working group. He made some comments, and said that, he was very proud of, the product. It was finishing touches were being put on that, but quite positive. And there's continues to be, a lot of speculation. There were some stories out of Bloomberg, recently. There's a few op-eds, one op-ed just done a few days ago by Stephen Moore. So, yeah, there's a lot of speculation, but we haven't seen a lot of action at this point in time.
But you've had feet on the ground in DC, and there's nothing anyone's saying.
Well, look, I was in DC a couple weeks ago and had, I think, some 30 different meetings with, some of the various agencies and some of those people on the Hill. And again, I think that the message is clear. It's been received. People understand the importance of the fuel cycle. A lot of people have learned a lot about the fuel cycle in the last few months. And I think there's broad support to do something. So it's really now about getting that driven into a final decision and on the president's desk to go forward.
Right. And you think with the appointment of the new secretary that this will rise to the top of the agenda again? Because obviously the Republicans are fending off a lot from the Democrats on several fronts at the moment. Do you think that will continue to be a distraction?
Well, look, I think it is a kind of an interesting time in D.C., but I think that, the administration is continuing to, work and try to advance, the sort of the platform of the administration. And, but there's a lot of noise in the background. Look, I have met with the DOE, and I think that, again, they're very supportive. And I think that, as I said during the confirmation hearings, we believe Secretary Briette is supportive. So we'll just have to wait and see. There's never any guarantee here, but we're closer than we've ever been, and we have successfully basically put this. If it wasn't on the president's desk twice, it's on the president's desk once, and not far away from his desk.
Okay, let's, for the sake of everyone listening to this, let's get away from the macro story for a bit. I think where everyone in the market is quite tired of talking the macro story. It's coming. We all think it's coming. Question of when. I'm not going to ask you when. So I want to get into some specifics. We've had some questions sent in to us by some of your investors, some of our subscribers. So can we kick off with the mill? I want to understand it better. Okay. So you've got a mill.
Yeah.
It has and can process uranium ore. It can also process vanadium. Can you give us a little description of what it has done in the past? What's its sort of optimal output, first of all? What's it set up to do?
Well, it has a license capacity of about 8 million pounds per year of uranium. I think the max it's ever produced is about 5 million pounds. That was really a limitation on the amount of feed that was available for the mill. But it has produced about 5 million pounds, which is a lot of uranium. But, as I said before, between the uranium, vanadium, the alternate feed, which has really kept this mill alive for decades, because it could generate revenue that was unrelated to uranium and vanadium prices. So, we have, in addition to being able licenses to process uranium vanadium ores, we have, I think it's 17 or 18 additional licenses that allow us to process other feeds that are not primary ores, and those have been received over a couple decades. And now this is not high level uranium. This is low level material, natural uranium. That is in different forms and shapes. Like we've got material over the years from Converdyne and Honeywell at the Metropolis plant. We've gotten stuff from Cameco, the Corps of Engineers, and others. And as I said, I think previously, we're currently accepting low-grade material from a uranium mine that's not in the Navajo Nation, but is in New Mexico. So that's the secret of the mill. Right. The mill can do lots of things.
And it's got licenses to do lots of things. Okay, that's I didn't realize that. So let's talk about that feedstock a little bit more detail. So Energy Fuels, how much feedstock can you put into your own mill, and how much comes from other sources, whether it be other companies or other lines of feed? What's the numbers?
Yeah. Well, the thing with the alternate feed is it's highly variable. It sometimes, historically, we've probably done $5 to $15 million a year of the alternate feed cleanup, and it will come in slugs. It's fairly consistent, but it's not something that is like constant day to day and what shows up. To put it into perspective, we've recycled about 400,000 to 500,000 pounds of uranium per year on average, somewhere in that order. That's equivalent to one nuclear reactor, a fuel load power reactor. So it's quite material, but again highly variable. Now, given enough feed, it can be greater than the $5 to $15 million a year, and that's where we've tried to expand it with things like cleanup of the abandoned mines on the Navajo Nation or other mines in the region.
Right. So that's talking about the kind of cleanup component. But I'm talking about, let's say price recovery and discovery comes back. You can get back into mining properly. It doesn't matter what the price is. It's at a price where you think it was commercial to get back into mining. What's the size of your resource, and how quickly do you get up to meaningful output with which to feed your own mill? Can you describe that process?
Well, the mill needs a certain critical mass to be, kind of at a sort of a optimal stage. Look, the mill needs to run generally about 1.5 million pounds, maybe 2 million pounds per year of primary ores to get sort of the critical masses. It has the capability to go up if you have more primary ores. But as I said, it also has the ability to augment that with some of these other feeds. I mean, sure, the economics of scale, ultimately would be best at, 6 to 8 million pounds per year, which we haven't yet achieved in a number of years, but we could achieve it at given the right circumstances. So it is a hungry mill. And I look forward to the day when it is fully utilized 100%.
Yeah. Okay. So that gives us a sense of the type of output that you guys are aiming for from your own asset base. Suggests to me that you're going to need to speak to, or you expect to speak to, a number of other feedstock suppliers, presumably within a catchment area, U.S. mines. Clearly, again, they're nowhere near being able to mine at the moment. The prices just aren't there. But are those? I mean, have you got some sort of sense of how much ore you're going to want to put through the mill initially versus when you're sort of optimized, because it hasn't operated fully for some time, has it?
Yeah, look, the mill is designed for 2,000 tons per day, so I think it's around 700,000 pounds per year.
Right.
We generally don't like to start the mill up for anything less than 100,000 tons for a proper run. But look, we'd like to feed it with 200,000-300,000 tons a year of feed, or more. But and sort of a really a sweet spot for us is that 200,000-300,000 tons per year of feed plus some of the alternate feed, and we have a very strong cash flow in those circumstances. So like we said, the mill is unique, and it being the only permitted conventional mill in the United States, and the fact that it's never ran at full capacity in that region. It really is kind of interesting in that it doesn't really make sense to have a second mill or third mill in the region, because we have the ability to take just about everything the region can give up.
Okay, that's interesting. And so how do you go about setting a charge, a fee? How do you determine what that number needs to be? Is it a percentage of what spot is or what market dictates? Yeah. How do you work it out?
Well, look in it's been done a number of ways in the past. Over the last year or two, we've been telling people if they want sort of assured access to the mill with the right economics, that we'd consider a joint venture of some sort. But if for example the government was agreeing to buy a certain amount of uranium at the right price, historically we would have people deliver their ores to the site. We would process it, and we would sell that into whatever contracts or purchasing arrangements that we had with either utilities or like the U.S. government. So, usually the miners, they might get, in the order of 50% of the value of the ore or 40% of the value of the ore delivered to the site, and we would take the rest for processing and for marketing, in that order. I don't want to be nailed down to the exact terms, because not all ores are created equal. Some have different requirements for reagents and whatnot. But that's generally how it works. Is people can deliver X amount of ore at a certain grade at our facility. We would then process it and sell it into the commercial markets. We'd have all marketing rights to do that.
Right. That leads on to a nice point. Not all ores are born equal. Some are low grade, some are higher, and I know it's all relative, but there's got to be issues for some of the lower grade ores in the US, to the point where it doesn't make economic sense to be able to ship it to you. It doesn't make economic sense to be able to build their own mill, even if it's a smaller pilot mill type structure. So, I'm looking at it from an investor's point of view. It's like, how do I identify companies which, quite frankly, just economically aren't going to be able to stack up? They may be able to get it out of the ground, but they're not going to be able to get this thing processed, and therefore they're not going to be able to make any money.
Yeah, look. it complicates it because they don't have the control of the agenda. I mean, we have the control of the agenda with the mill, but look, over time, in going back 20, 30, 40 years ago, there were companies that could actually and it was really not so much like public companies. They were more private companies, sole proprietor type operations. It could make a fairly decent profit off of toll milling at in the right circumstances. But look, it's just a bit more complicated. There used to be 20-some mills. A number of those would toll process. So if you didn't like the terms with Mill A, you could go to Mill B or C. And it may have to transport it further or whatnot, or it may have a different circuit or something. So, or not have a vanadium circuit. Not all of them have vanadium circuits. So, look, it's variable. We own the mill. We control the district. We would like to see some of these smaller other mines open up at some stage. Because we have the room to take that material in the right circumstance at the right pricing. If it doesn't make sense, we won't do it. But really, these other companies have to take the risk of mining, on their own, their own risk. So it's mining.
Well, I mean that's my point here. The longer we study this uranium space, the more disconnect I think there is between investors and understanding the realities of mining. The fundamentals don't change. Grade remains important. Being able to get it out of the ground remains important. Management teams who have done it before remains really, really important. And one of the questions that keeps coming back, it's not going away, is there a discussion to be had, or are there discussions being had with regards to, you mentioned JVs, but the question is mergers. It would seem sensible for some companies who perhaps haven't got the full capabilities to do end-to-end producing and selling into the market to get together, whether it be club together as a JV or be open to like I say, some sort of merger of at least at asset level. I mean, have those conversations happened with you? Are you aware of any?
Oh, look, I think there's a number of people that have been out there kicking tires. The problem that we're in right now is that people don't have revenue and they don't have profits or negative cash flow. So, I think for me as a conservative, I hate to take a negative cash flow and add to another negative cash flow, to make a really big negative cash flow. We're in a position where we think we'll get relief that will push us to a positive cash flow soon, hopefully. Not guaranteed, but we think we'll get there. And once I have line of sight to positive cash flow, then acquisitions look more appealing to myself and to Energy Fuels. And I think that particularly in those circumstances where we have the mill and the facilities ready and positive cash flow, some of these other companies that have a decent project that are negative cash flowing, and we know there's a few out there that are quite prominent, then it makes more sense because you can't keep diluting forever.
Well, that's our read of the situation. I just wanted to understand, if there had been any conversations with you and other groups. I know your conservative position. Are you saying then you haven't had conversations with other companies yet?
Oh, look at I've been back about three and a half years, and every 6 months or something, somebody might ask if we might be interested in, and look at we're not opposed to looking at what that might look like, but at this point in time, as I said, we've got we're asset rich. We're asset rich, and you only need so many assets until we see improvement in the market.
But what do you mean by asset rich? When you say you can produce 1.5 million, maybe 2 million tons for your own mill, you're still huge capacity there at your mill. You're saying, well, I don't want to necessarily go out and commit capital expenditure yet. Is that it?
Yeah, look. I know we're just talking about the mill, but we also have our ISR facilities as well too. And we're continuing to permit Roca Honda, which could be 2.5-3 million pounds per year from that facility alone. It's still a few years off on the permits and stuff, but as I said, when you have fully constructed, fully permitted mines, mills, production facilities, it costs money to keep those in compliance and in good standing. So when I say we're asset rich, we've got 3 production centers, we've got a number of mines, we've got a large land holding position. That all costs money. I guess the point I'm making is, when we've got, the largest position in the United States by far, and actually probably one of the largest positions in the world for these smaller companies, we want line of sight to cash flow.
Okay, fair enough. No, understood. That's a fair point. Can we move on to land cleanup? You have mentioned it previously earlier. Do you know what I've looked at your Q3 financials? But do you know what you're going to end up making on the New Mexico cleanup? Yeah,
look, I can't go into all the details, but we're paid a fee to receive the material, and we receive the contained uranium in that low-grade ore. When we process it, we'll be able to receive that to our account. But it's quite a reasonable arrangement, and it is quite reasonable in the types of things that we certainly could entertain with cleanup on the Navajo Nation. We're still having some very, I think, productive discussions with a number of parties on who are interested in having access to the mill. But the funny thing about the alternate feed and the cleanup is, as we it's kind of like horse trading. There's times where the grade is high enough that we'll take it for free, material for free. Sometimes people pay a fee, and we don't keep the uranium, or the value of the uranium, or some combination thereof. So it can be very variable, depending on the quantity, the grades, the metallurgy, and whatnot. So, I think on the Navajo Nation, particularly, I think that the tribe is quite anxious to start seeing some progress. They really have been studying this for a lot of years. It's basically overall is being managed by the U.S. EPA. You got the Navajo EPA. We're very, very open to helping getting this going sooner rather than later.
Okay, but
if they want to utilize the facility.
Right, but to answer the question, so I appreciate maybe you can't get into the numbers. Just tell me if you can't. But the range that you mentioned in the Q3 financials was between 700,000 and 3.5 million as revenues payable. Do you expect it at the higher end or the lower end?
As I said, Matt, I don't want to go into the details, okay. But generally speaking, we try to get fees that process, cover the processing fee so that we don't lose money on it, even if we don't recover the uranium. But no, look, it can be, it's not the core focus of the business. You've heard me say that before, sure. But it is a very unique space. We have had companies come and say that, they would like to, participate in that somehow, on the other end, not as using the facility, but being an investor. But we find it's just a unique spot that nobody else has in this space.
So you're not losing money. You might be making money, and it's contributing towards your overheads.
And it depends when we run the ore, the price of the uranium at the time we run the ore. So, I'm not trying to be evasive here, but it's hard to quantify. But I will say this, that the mill, in the 3 years I've been back with Energy Fuels, generally speaking, the mill's been cash positive, just off of what it's been doing. So that in itself kind of, says a lot to where it can fit in. Now, we're also, in addition to, the cleanup in New Mexico, pursuing the Navajo Nation and some of these other alternate feeds, we've always got proposals out to 2, 3, 4 other companies for other material that they have, that they're looking at options for dealing with that material, and as we've done for the last couple decades.
Okay, and you've got contract or quotes out. People, are you winning quotes, or people remaining static like the rest of the uranium sector?
Yeah,
what's happening?
Well, as I said, people have material. They ask, can we use the mill? The first thing we have to do is find out. I said we had these 17 or 18 different permits that have been approved by the state of Utah. We got to make sure that it is, covered by those permits. If it isn't, we do have the ability to go in for a permit amendment to add another type of stream. The state of Utah wants to make sure that one, we can recover uranium. Two, the material is suitable for our facility, including our tailings facility. So there's a review that goes on. As I said, it's like horse trading. People. It's amazing because people around the world, recognize that White Mesa can do these treating these unique streams. And even when I was at WNA, I'm sitting on a bus and a gentleman reaches over and says, "Hey, you guys have got White Mesa Mill, and we'd like to see if we could run certain streams of material through that mill in at some point in time." And so it's just a unique little nut that, and as I said, the biggest problem with alternate feed over time is we're not trying to make it our core business, but the variability of when you get the material, when it shows up, what the pricing is and whatnot, and when you run it. I mean, sometimes we'll put this stuff on the site and it may sit for, 6 months or a year or something, until we decide it's time to process it.
Okay, so you're you're in commercial conversations all the time about just keeping the thing ticking over. Can I come back to Navajo Nation? You talk about the Navajo Nation EPA there. I get that you want to and you're open to, but that's a long-running conversation. When's someone going to pull the trigger on that?
Well, as I said, ultimately, the EPA has responsibility for the process. They're looking at, a number of options. Like, for example, some of this low-level material, just bury it in place, near these mines, take it off-site and do direct disposal in maybe a government, funded, disposal site. But then they can't recover the uranium. They certainly are aware, both Navajo EPA and the EPA, federal EPA, that White Mesa, where it's located and what it can do. As I said, we've done government contracts in the past, including the Corps of Engineers. So, but it's really the trade-offs on cost, trucking distance, the amount of contained uranium. All those variables, may make sense that there could be, 2 or 3 options: dispose of the lowest grade material on site, off-site disposal for some of the sort of the medium kind of grade material, and then processing for the uranium at White Mesa for the higher grade material. So, but they have a very prescriptive process that requires a number of studies to be done, and in some cases public comment. There's a number of settlement agreements that have been signed with a number of the companies that had past involvement with some of those mines. There are some restrictions on how they use the funds. So, it gets to be sort of can be complicated, but we're trying to make it simple because we're ready to go now. As I said, we're already doing something very similar with this project in New Mexico. So, we don't need to study it. We, will take material today,
right?
If we have the opportunity.
Okay, so there's a fund sitting there waiting to pay for these studies, but no one's pulled the trigger on those studies yet. And until those studies happen, there's no sense of what's there in terms of high grade, low grade, or what even to do with it, and therefore no public consultation period done yet. So I mean that gives us a sense that this thing's it could take a while, doesn't it?
Well, no, there's been studies going on these sites for years now,
right.
and I don't know how much has been spent studying it, but I'm going to throw out a number of $100, $200 million, $300 million of studying some of these different sites. So there's a lot of money been spent with engineering companies and the EPA, and they have reclaimed some of the sites at some level. So there is money being spent on it. But I think I think the government over time, and I'm not trying to say this in a negative perspective, but isn't necessarily the best project manager when it comes to be spending these kind of funds. So, I think you need some sort of partnership to come out with the best outcomes, and that's basically what we're trying to offer up to the EPA, to the Navajo Nation, as a viable, commercially attractive alternative, while recycling a lot of this material that wouldn't be recycled otherwise.
Wow. Sounds like you want to be in the engineering business if they've spent that amount on engineering.
No,
right?
yeah, well, yeah. Look at the engineering companies. This is a big project for them. There's a lot of interest in it, but we say let's not study it to death. Let's get some loaders going and clean things up and get some work done.
I think you're right, and I wasn't being flippant, but I think that's a lot of money spent on a lot of analysis without actually doing anything.
And that frustrates a lot of people, including the
Navajo,
the people on the Navajo Nation. They're saying a lot of these mines were mined in the the 50s, 60s, and 70s, and they've been sitting there for 40 years or 30 years, and they just like something done.
Get on with it. Right. Okay. Can I just talk about vanadium? I think you did answer this in your, again, Q3 financials, but it was asked, so I'm going to ask you. Obviously, vanadium prices come down to about a quarter of what it was at the beginning of this year even. So what are you doing with the vanadium which you are mining?
Well, we're putting most of it in inventory. I don't know the exact number now, but we're probably around 1.5 million plus pounds of high purity vanadium. High 99.6 or 7%. We've sold a little bit of it, a lot, and we're trying to target sort of the premium markets that, can pay an extra, $1 or $2 pound extra because it's the high quality. We have sold a few truckloads to some of those potential purchasers. It was a wild ride. The price went up nearly to $30. And, we had planned to hopefully sell it for around, $17, $18 per pound. And now it's $5-6 a pound, depending on what review you're looking at and what part of the world. But what we have done, which we're very proud of, is that we've proven we can produce this high quality vanadium. We've got a lot of young people that hadn't been tasked with running the vanadium plant, and they've done an excellent job. In some cases, they've done better than some of the old time guys, just because they weren't kind of constrained to the way we always did it. So they've done a very good job, and we're very positive that the lessons learned, puts us in a good position when we go back to conventional mining and milling of traditional uranium vanadium ores.
Yeah, I mean, I think some of the big guys like Largo and Bushveld have been hit pretty hard too with the obviously decline in price, but I think the general outlook is very positive. So you're stockpiling the vanadium you're producing, waiting for the price to pick up again to whatever level you determine.
We've got drums of vanadium sitting out there ready to go, and I think I told you, Matt, in the past when we've discussed that when I was involved or worked with Union Carbide 30, 40 years ago, vanadium was volatile back then, like it is now. And Carbide told me that the only way you can capture the market is to have inventory. So we hope not to be put in a position we have to sell it at low prices. So our goal is to keep a nice supply there ready to go that can be dispatched in a matter of a day or something if required.
Right. Okay. So you're piling up the cash. Okay. I don't think there's too much more to say about that one. Maths test for you now, sent in by someone. So we're trying to work out value of your company when you get to a point where you think you can get back into production. Okay. So you've said to me in the past it's about $55 the spot price needs to get to before you think that it makes sense for Energy Fuels to kind of get going again. Is that still your number?
Yeah, look, the magic number for sustainability, I mean, I'm talking about reinvesting and starting up some new projects. I think it's about $65. But when the price uranium goes north of 50, we start doing things at different sites. Okay, but the sustainability in this business, and I'm talking sustaining capital and investing in more permits and buying equipment is closer to $65. Now, I want to remind your viewers and yourself that, like, when we closed out our uranium contracts a year ago, that was in the $60 a pound range. So in the 60s is not unheard of. When it comes to long-term contracts, from 6, 7, 8 years ago. So, north of 50, we start getting excited.
Right. Okay. So if that is the case, we look at your price today, you look at your share price today, you look at your market cap today, like everyone, it's been hammered. There's nothing really to base it on. These are just arbitrary numbers. It almost feels like for the uranium companies at the moment. What do you think your natural state is? What's your natural market cap? What's your natural share price?
Look, I think with the right uranium prices, going 50, 55 up towards 60, in the 60s, we should become a $1 billion market cap company. That would. Or north of that. I worked for Paladin Energy, and we got to $5 or $6 billion with in the better market. I tell people, and I'm happy to say this, that my incentives, I get share appreciation rights that vest at $5 a share, $7 a share, and $10 a share. The board, awarded those to the key executives. With the view that that's what it takes to become a $1 billion company. So, I don't see any reason we can't get there in the right pricing environment. I tell investors that if they're wanting multiple bagger kind of returns, that's how my incentives are largely structured.
Right.
On that kind of return.
But so what's the formula you've used in your head there to get to $1 billion plus bucks? Okay, so what's happening in the company to allow you to come up with that number?
I think to get to $1 billion kind of market cap, we've got to have line of sight for 2.5, 2, 3, 4 million pounds per year of uranium production. I'm not saying you get there overnight, but I think the first step, I've said to you in the past that we have this first rung, which is, that 1.5 to 2.5 million pounds of production that we're hoping that, the working group will deliver an outcome that is, kind of gets us, going that direction. And then with improved uranium markets, positive cash flow, then you hit the $1 billion. So as I said, there's no exact roadmap of how you get there, but if you go back to that 2007 2008 period with Uranium One, Paladin, a few others, they became multi-billion-dollar companies in many cases without any revenue. But I'm saying we get to that million plus or billion plus, showing that we're ramping up and we have revenue and we have positive cash flows.
How quickly do you get to 2 million pounds?
Yeah, it's probably about 18 months, 24 months, something like that. So fairly quickly. It takes time to get the momentum going. I mean, the first thing you'd have to do is start hiring people. The mill is operating now. Nichols Ranch is operating now. We're still doing some work at LaSalle. So we can go pretty quickly, but people that say they can get there in a couple months or something are fooling people. But we would we would start, because we're already producing right now, we would start ramping up from now to, over, a year or two or so. But it does take time.
Yeah. Okay. Do you think there's any price discovery without an announcement from the Nuclear Fuel Working Group?
You mean in terms of the global market?
Yeah. Spot price.
Well,
is it going to come back without an announcement from the White House?
Well, it has to come back. It has to come back because the true value of producing a pound of uranium is north of $50 per pound, at $50, $60 a pound. That's what it costs in the Western world. And really, if you look at the fully loaded cost in a lot of, these developing countries, when you look at, the amount of money that was spent on exploration and building facilities and whatnot, if it's not 50, 60, it's not far from that. So it has to come back. The industry will not survive if it doesn't. Cameco will not survive. We will not survive. None of the Western producers will survive. And frankly, a lot of the state-owned enterprises won't survive. So it has to come back. So people say it's not going to come back. That's baloney. As long as the demand for nuclear power plants and consumption continues to go up, current spot price at $25 or $26 per pound is unsustainable in any outcome.
What are the utilities telling you?
Well, I think a lot of people get off in la-la land and they think that, this could go on forever, but it can't. It cannot. We're consuming inventories. The cost of running these sites continues to go up. Basically those that are still producing are high grading. So it's not sustainable. So anyone who thinks that $25, $26, $30 a pound is going to be here for another 10, 20 years, I live in Colorado. I won't say what they're smoking, but it's legal here. So it is not sustainable.
Okay. So you've got a lot of working capital, more than most, right? You've got a lot of companies. We talked about this again last time, but there have been a few of the smaller companies, share price been knocked. They're having to raise money. Some have, some haven't. But they're going to need to real soon. When do you think this thing is going to turn enough for the funds to get interested in funding some of these smaller companies? Or do you think these smaller companies are going to get funded? I'm talking about, sub 30 or sub 40 million market cap.
Yeah. Look, I think that, and I've said this to you before, we've tried to put some inflection points into our company with things like what we've done in Washington, D.C., the alternate feed cleanup and everything. I don't see the global uranium price, going to $50 or $60 in the next month or two or the next year. It may, but that's why we need, at least our company needs, relief, through this government support, just as the Russians and the Chinese provide government support for those industries. What we continue to ask for is we need demand. We need demand immediately, not 2 years from now, but like in 2020. We need prices that put us up in that, north of 50, well into, hopefully into the 60s, to come up with a sustainable outcome, to help sort of plug the dike for the U.S. producers. Now, not all U.S. producers would be able to capitalize on that, because not all are ready. Not all have good projects or proven projects, and not all would be able to raise the money to build new projects. If the government gives relief, that relief should be focused on existing infrastructure in the first instance. Why would you go build a new facility when you have a number of facilities ready to go? So I don't know if I answered your question, but I think that for those that have hundreds of millions of dollars of capital costs required before they can get in production, 100% uranium focused, it's a long bow, unfortunately. I wish it wasn't for them, but it is going to be difficult.
Okay, so I'm going to ask that question a slightly different way. If you ran a fund or whatever institutional structure, and a uranium junior came to you and said, this year, and said, it's going to be okay, I need some money now, are you investing in them if they are not a near-term producer, or say, I'm talking about these kind of 30 to 40 million market cap companies, because there are a lot of them trying to tell this story with teams who've not done it before, with assets which, as I say, I don't think people are listening to the fundamental story too much. They're looking at the macro. Are you investing in small companies, or are you investing in companies with perhaps a bit more of a track record at this stage?
I absolutely invest with those that have the track record with the assets and the capital. It doesn't mean that there aren't some very good new projects that may be worth a small investment, if the market moves. But right now, we're in a tough predicament. And as I said, the existing infrastructure, the projects that have been put on standby, the projects that are ready to go, if there's relief, through the U.S. government in the United States, it should go to those type of facilities first, and not to new facilities. So there's a number of properties ready to go, and now outside of the United States, we know there's been some good discoveries, like NextGen has a wonderful deposit. It's still a ways off. I'm not saying that but that's not the 30-40 million market cap you're talking about. There are some properties that I like, maybe one or two in Australia, but for the near term, if I'm a fund manager, I'm going to go with the proven producers, those that have been there, done that, and have the facilities and have the track record that shows that they'll be able to deliver an improved market.
There you go. Mark, great to catch up. I like your candid responses. I appreciate that. I think, obviously it's tough times for everyone. I hope some news comes out of DC soon. I hope Mr. Trump is allowed the luxury of time to focus on the nuclear position in the US. And we look forward to hearing from you in the near future as well.
Thank you, Matt. Have a Merry Christmas and a good holiday. Hopefully you get a bit of a break.